Good morning to our panelists. Thank you so much for joining me on screen. I'm sure our audience will agree. I'm very lucky to be joined by some of the industry's experts, and I'm really looking forward to getting into the debate today. We've already done some introductions, so I will just dive straight into the questions. We've seen customers' needs change throughout the pandemic, from assessing their priorities within their homes, from garden space to if a property location is essential, but we've also seen a lot of product movement over the last 18 months too. From restricted LTVs and lenders closing shop to new product innovations, and one range that I think has gained a little bit of traction over recent months is the green mortgage. So my question to the panelists is, why is this? Why have we started to see more green product emerging? So let me just direct that one to Richard firstly.
Superb, thanks ever so much, Eloise. So I think the starting point for why we're seeing green mortgages is looking at the institutional investment of lenders. There's a big focus on ESG amongst the banking sector at the moment, and obviously a huge focus on wider corporate social responsibility and sustainability overall. So given that banks are operating in this space from a day-to-day basis in other areas of their business, it's inevitable that it filters down towards the products that they make available to consumers, and in that respect it's a very, very good thing. Yeah, it's clearly something that we need to do. You know, if I ask my children, the thing that they're most worried about the future is definitely the environment, and more lenders can do to support and promote that, the better. Whether green products at the moment are the answer remains to be seen, but I think we will start to see more and more emerging. I think it will then need to be boosted by education, so that there is the consumer awareness, because to come to your second point, you know, do customers want green mortgages? At the moment, I don't think they do, but that's not because they would turn down a green mortgage. It's more that they're not aware of their existence, you know, and that's buoyed by data that we see. Brokers, according to data from the research tools that are now widely used, like Knowledge Bank, Criteria Brain, brokers aren't searching for green products yet. I think once these gather momentum and you start to see the products insist on certain things or promote more the ways of a consumer making their property more green, then they will start to gather more traction inevitably.
Oh, brilliant, thank you, Richard. And Danny, what are your thoughts?
Yeah, I would agree, Richard. Lots of good stuff there. Definitely more education. You know, I think brokers will do well having simple infographics that I know that Kensington have produced in the past and other lenders. So we need to sort of do that. But the consumer needs to be more aware as well. I think, you know, research has suggested that they may even pay up to 1% more on their rates. I'm afraid I don't buy that. I think people just want the cheapest rate for their mortgage. But it's what will the products actually do? What benefit will they actually bring? And I think that there are. We've spent a lot of time dabbling in the new build, or we've seen the early entrants dabbling in the new build market, which for me isn't quite the right place to start, because these properties are becoming more and more efficient every day. But there's a huge second-hand market that our existing stock needs to be changed, and the products there which create the right incentives aren't available as yet. And that's where I think we need a lot more help and support and consumer awareness, that they can actually make some significant changes to their properties, not in every property, but in the vast majority, to actually so concur with the agenda that the government are imposing on us. And so it's definitely more help, more education, but we've got a long way to go as a lending community to come up with the right solutions.
Brilliant. Well, that's a great segue, actually, Craig. So anything you would like to add from the lender's perspective?
Yeah, I mean, we've had our green mortgages for nearly 2 years. They sell very well. They come with £1,000 cash back. So the question is, do they sell because people want green mortgages, or do they sell because it comes with £1,000 cash back and they're cheaper than our normal mortgages? So I think what you'll only really know is if actually you are prepared to pay more for a green mortgage, then clearly there's great value for you in a green mortgage, or if they're the same price and customers pick them. And I think we need to kind of look more broader than just the mortgage. So I did see a recent survey by CBRE basically saying that a D-rated property should cost about £300 a year more to run than a C-rated property. So actually, it's not just the mortgage, there's a knock-on impact for the customer, which is quite helpful. But I think we are quite new as an industry with the green initiative. So I think lots more innovation, as Danny said, I think everyone's been focused on the properties that are the high EPC ratings already. Our products are slightly different because they take lower EPC ratings, than if the customer improves them, they give them £1,000. So, which I think is great, because that's where the climate opportunities is in the second hand, the old Victorian terraces that need to be improved. So I think there's a long way to go, but I'm hopeful there's going to be a lot of innovation in this space.
But Craig, from that point of view, it's great that we can sort of save £300 here and there on our utilities and things, but for me that's not enough. The cost of actually improving properties could run into, from being sort of a couple of thousand into several thousand. And how do we actually find a way to demonstrate that there is greater value? So energy efficiency is absolutely one thing, but car insurance, for argument's sake, is now more expensive to insure a diesel car than it is a petrol car than it is an electric car. If that applies to EPC ratings in our world and household insurance change, there's another saving. If you do work to your house, does it actually improve not just EPC but the value of that property? And how do we actually quantify that more to actually show that actually by doing this work to improve property could actually add more value than just saving 300 quid a month or sorry, pounds a year type thing? So I think there's a long way to go to really show the true value here of doing the work, because we all need to do it for the right reasons now.
Oh, brilliant. Thank you, everyone. And yeah, that leads really nicely into the next question, actually, because that's something we're even starting to see with the government's introduction of EPC requirements needing to be at level band C, required by 2025. So will green mortgages offer that solution for landlords, or even perhaps incentivise developers? Danny, let me come to you first on that.
I think they will, but we've got to do it in the right way. There's a lot of our housing stock that's D-rated and obviously got to move to C-rated. For some, it'll just be more sort of loft insulation or some very sort of quick wins, which will be low cost in the scheme of things. For others, it will need a bit more, but we need the products there. Is there a solution to say it's great to have a cashback, or do you have a voucher that actually, rather than cashback, towards that work? I don't know how we'd actually manage that and control that. I don't know, but I think that I'd rather see landlords work on their property than actually decide to sell and maybe purchase lots of new build properties which are ready made, because actually that just passes the problem to somebody else. And actually, whilst that may be right for some investors, they want to invest more in new build, for a lot, they're not going to sell their existing stock just to sort of get out of doing some work. So we've got to find some sensible solutions, and I think products are one step forward. I'm not saying it's a be all and end all, but we can certainly make some great strides.
Brilliant, thank you, Danny. And Richard?
I totally agree with everything Danny said. I think ultimately landlords have had to become more professional over the last period of time, with the underwriting requirements that have changed, and now with the EPC requirements that are coming down the track. And I think that we're a long way away from the bad old days of landlords having a terrible name. Again, I think it comes down to education, though, and Danny touched on new build earlier. A new build property is far easier to make energy efficient. What we need to do as lenders and distributors now is help landlords and mainstream residential consumers with how to make their properties more energy efficient. And brokers can't be relied upon to do that, because they already have enough to do with the complexities of product and underwriting and everything else that I'm sure we'll come on to, and then not to mention protection and general insurance. So I think this is where we actually have both the power and the more of the time and the scope to be able to educate more, and we can offer products that make a saving if you're more energy efficient. But what actually will add true value is help with procurement. When someone buys an older property, could taking a green mortgage actually demonstrate the suppliers that they could use to provide windows that are more sustainably sourced, or that provide greater energy efficiency. And that, to me, is how we sort of think about it slightly differently, but fulfill our role as larger corporate entities in supporting this green agenda.
Brilliant, thank you, Richard. And Craig, anything to add there?
The only other thing I'd add is it's not just pain. So clearly, landlords are looking at several £1,000s to potentially get up to a new higher standard, which is pain. But there could be some financial benefits. So like Danny says, if they've spent the money, hopefully they can recoup some or all of that money, because when they sell the property potentially to another landlord, it's already been done. So that's got to be worth something. But then also you may well find that if you do have an energy efficient property, you might be able to charge more rent, because if the customer's thinking, I'm going to save £50 a month on my bills, but the rent's 25 quid more, then actually that's quite a good trade-off. You still do that. But that means the landlord's getting another £25 a month. That then goes into landlord's affordability, because we'll use the rental. So that means they can borrow more. So there's definitely some positive sides. It doesn't necessarily just have to be paying. There's potentially some financial upsides as well for the landlord by doing this.
Brilliant, thank you. Well, moving on to the next question then. So we've also seen in the last 18 months first-time buyers' needs changing. So we've observed the average age for the first-time buyer rise to 34 years old, and the average first-time buyer deposit grow by £11,000 in just over 18 months to 57,200. So what should the market be doing to better support these customers' needs? Richard, would you answer this one first?
Well, first and foremost, we clearly need to do something, because the prospect of my children living with me till they're 34 is quite scary. All joking aside, though, we've had a period of time with Help to Buy, with pre-pandemic, the accessibility of 95% LTV mortgages, and then post-pandemic, the really quick response of not just the government but lenders like Kensington to launch high LTV products. We've now got stamp duty holiday having ended, and obviously Help to Buy coming to an end. So we're going to need to find other things that can buoy this market. I think one of the starting points will be loan to values on new build flats. New build flats are in a lot of areas one of the only option for first time buyers. They're the only things that are affordable, and I think as a result of the pandemic will become even more so as city centre flats potentially become a little less attractive to families, for example. But the LTVs still aren't high enough. We know first time buyers can't access deposits, so make LTVs on new build flats higher. The other really important point to me is intergenerational lending, and what there's not enough of are products. The equity release market is great, and it functions for those people in retirement, but there's nowhere near enough accessibility for people planning for retirement. So the fact that apart from a couple of lenders, interest only broadly stops at 70. You've actually got high caliber borrowers who can and will carry on working till they're 80, want to leave a living legacy, but want an interest only facility. And we regularly speak to firms who, for example, will say, well, I've spoken to a high net worth individual who wants an offset product beyond 70. There's 2 tiny building societies that provide that, and that's remarkable. Big gaps in the market that I think can be filled that will support the first time buyer market.
Brilliant, thank you. And Danny, what are your thoughts on this?
I have to agree. I mean, I know Richard and I have had several conversations around this over a long time, and he hasn't mentioned the word guarantor yet, but so we'll let him off that. But the reality is that this has been a problem for a long time. This is not a new problem, and it's how do we address. Things have got worse as people need to have larger deposits. I mean, the thought of me finding £57,000 for each of my kids, well, good luck with that. So what are the solutions? And yes, it's great to see 95%. It's great to see new lenders come to market. We've now got one that will take up to 6 applicants and things like that, which is very different. But there's also the sort of newer schemes that are trying to play more in the new build market, but we're not getting lenders actually on board with those. There's lots of talk, but we need some more action. We need some more definitives around, okay, what will we support as lenders? What won't we support as lenders? Now, I don't want to increase your risk any more than your appetite is today, but we need some clarity around what sort of thing would actually work and what will lenders support. A number of these things require second charges, for example, but there's so many lenders that won't accept a second charge. Well, times have got to change. We've got to think differently. And I think Richard's right. Equity release, Rio to a point, other later life type things are going to play a vital role in order to raise deposits for the younger generation. I think COVID has been a real instigator of conversations across families about what does the future hold. And I get a sense that the older generation want to help the younger generation, but while they're still alive, while they're still here, because actually they want to see it happen. and we need that innovation to continue and continue to develop to actually enable that to happen. I think Richard's right. The Regional Building Society could actually play a huge part in this if they want to, and indeed specialist lenders that can look at these niche areas and do it in a way that really understands the circumstance and see common sense and provide some great solutions.
Wonderful, thank you. And Craig, from a lender's perspective.
Well, I mean, it's definitely a concern. If you look at the huge increases we've had in house prices since the start of the COVID, you know, that does two things. It makes the deposit harder because your 10, 15, 5%, whatever gets bigger. And of course, your affordability gets even more stretched because you're trying to borrow more money. So it's a double whammy because they're the two challenges that first-time buyers have. And first-time buyers are the lifeblood of the market. It's about 40% of the purchase market. So really, really important that we fix this. And, you know, we'll go to 90 LTV on new build for flats as well as houses, and 95 on residential. But they're still not great solutions for everyone because they've still got affordability challenges. 95 affordability is really hard. So I think we do need some innovation. We've got the help to buys finishing next year. So again, that makes it even more challenging. The thing I would say about that is I think there's a lot of people who've kind of gone into new build and help to buy. Well, sorry, gone into new build because of help to buy, because it helps your both your deposit and your affordability. So if there are solutions, hopefully they'll be on the second-hand homes and not just new build. So that kind of broadens out the base of buyers, which would be really good. I think some of the innovation we might see, we've talked about kind of private shared equity. So there's some interesting assisted deposit schemes out there. And then one thing we're looking at is very long-term fixes where it's one rate for the whole mortgage. Pure benefit for that for first-time buyers is there's no stress rates because there's one pay rate for the whole length of the mortgage. So potentially that helps with the affordability. And if we can do that at a 95 LTV, that helps the deposit. So I think what we need is the government supported this market through new build and help to buy for the last 8 or 9 years. I think we all need to step up and find some innovative solutions because it is a worry, and I think it's only going to get worse unless we do something.
Brilliant, thank you everyone there. And our last question today. So in light of the last 18 months, we've seen customer situations becoming more specialised, and this could be due to the pandemic's impact on customers' credit files, jobs, the use of government grants if they were self-employed, and the list goes on really. What opportunities does this present to lenders and to brokers to better support these customers? Danny, I'll come to you first on that one.
I think it's a huge opportunity. I read recently that 1 in 4 mortgages was specialist to some degree. I can only see that increasing really. You know, the jobs market has been really interesting. Thankfully, we've got a lot more jobs than applicants at the moment. May not necessarily be in the right areas, the right regions, but at least we're trying to do the right thing. You know, COVID crisis has shut down a number of businesses, sadly, but it's created a whole load of new opportunities as well. And I don't think the jobs market is, or you know, people being out of work will be a problem for long. I generally think that's coming back. However, there are definitely some people that have had some difficulties or some challenges that really need specialist lending more than high street. I think the high street have had such a boom over the last 12 months, and some great opportunities will still be for them. They're not going to come and play in the specialist space anytime soon. So it leaves a great opportunity for specialist lenders. Self-employed has been spoken about so positively across lenders, and you know, Kensington have been at the forefront of that, actually sort of leading the return more than anything. You know, that sector is also growing because people have been made redundant, they've taken an opportunity to move forward. They're going to need help. So it just points to me to be a very positive space for specialist lending. But for brokers, it's about getting involved, keeping on top of things, keeping educated, using the tools and the systems. You know, Richard has kindly plugged everybody else apart from L&G, but I won't take any offence by that. But the reality is that these things are there to help brokers and create awareness. So from a broker point of view, take advantage, keep your knowledge up, ask the questions, get involved. We're now out on the road. Come and say hello. You know, absolutely really important to learn things and re-engage so that we can actually be as knowledgeable as possible to help every single customer that comes through our door.
Excellent, thank you, Danny. And Richard.
Muted there. Absolutely agree with Danny. It's a massive opportunity. Complexity, first and foremost, requires advice. For anyone that is in a slightly more difficult situation, the first thing that they should do is go and speak to a broker. As far as brokers, what they can do, I think it's sort of casting the net far and wider in terms of the lenders that they use. A lot of the lenders that are doing great things in the self-employed space in particular are some of the smaller building societies that brokers are maybe not quite so aware of. Notwithstanding the great work that specialist lenders like yourselves are doing, but I think you've done a very, very good job of promoting that, and there is an awareness there. I think from a lender perspective, it's about getting BDMs out on the road and into offices and educating. You can do certain amounts on screen, but I think actually having people that are able to go into offices and look at accounts, look at customers' accounts, look at their bank accounts, that will actually help a lot of these more difficult cases get placed. Brokers, then it's about welcoming BDMs back in, COVID safe, of course, and make sure that you're putting yourself out there and having the conversation to understand the requirements, because yes, it's more complex, but I think if you understand the different nuances and broadly speaking, what's really changed with self-employment is, whereas it's always been look at what's happened historically, the 2 years or 3 years and then take an average of that. What we're now lenders are wanting to look at is the present. Look at the bank statements and the performance of the last 3 months, drill down in that detail. Does it stack up to the income figures that are being quoted? But then also a little bit more forward guidance and looking at the future. And I think if brokers can educate themselves or work with BDMs, work with lenders to get educated, there's a range of fantastic solutions out there. It's just a case of stepping away from comfort zones in terms of the lenders that they maybe use fairly regularly. I think the final point in terms of what lenders can do is to help consumers more recognise when it's not one for you and actually point people in the right direction. We are supported by an absolutely phenomenal industry of a wonderful sales force of BDMs across the piece, and the best ones that I've ever engaged with are those that actually look at the fact that there is a customer at the end of this and will say, that's not one for us, but do you know what, I had an inquiry about this the other day and I know X, Y or Z lender might do it. Have you tried speaking to them? And the more that we can actually sort of share that love around, the better consumer outcomes will come off the back of that, and that's what we should all be looking for.
Oh, excellent, thank you for that, Richard. And Craig, anything else to add there?
Well, I totally echo Richard's sentiments. Now, the most important thing in the whole list is the customer, but I do think it's a great time to be a broker. Complexity is a broker's friend. There is no question things have got harder. And with the kind of hysterical press saying if you're self-employed, it's impossible to get a mortgage. If you're a first-time buyer, it's impossible to get a mortgage. If you live in a flat, it's impossible to get a remortgage. Everything's impossible. And of course, you've got high street banks where typically some people used to go. It's pretty hard to get through on the phone, and branches are closed or whatever. So it actually plays into the hands of the brokers that people need help because life has got more complex. And that's great because that's where the broker advice comes in, and that's where the broker's kind of expertise to help those customers navigate through the maze is really important. I think last year was an all-time high for the amount of customers that used a broker rather than went direct to a lender, which is fantastic and actually shows the real value. I think it's 92% of buy-to-lets goes through a broker. It's about 80% of customers, so which is superb. So it shows people are getting the value from the broker. And the thing I would say is that, like I say, complexity is your friend. The more specialist the market gets, actually, the better it is for brokers. No question, makes life harder, because it's hard to place a case, but it means they are future-proof. I think if you look at things like product transfers, if you look at easy remos, this is where the digital brokers will play and the digital direct lenders. That's the kind of business that the aggregators will try and do. Really, really hard to do specialist, and we've seen some of them try and fail and pull away from doing specialist. So I do think, like I say, it's harder being a broker because it's harder to place a case. You have to do more research, like Richard said. You have to talk to your BDMs, really have a feel of what's going on in the market. But actually, that just means you become more indispensable than ever, which is a great thing, and you can help more customers because they can't get the help anywhere else.
Well, brilliant. Thank you, everyone. Well, that brings us to the end of the questions. So hopefully that's provided some really good insight to the intermediaries who are watching today. But just wanted to say a huge thank you to Danny, Richard, and of course Craig as well for joining us this morning and sharing their thoughts. So thank you.
Thank you.